Good morning, this is Rachel live from Kalkine Studios in Sydney. You're watching the opening bell. While the commodity supercycle and key economic events are closely eyed by market participants, Australia's federal budget has opened glimmers of hope for business, economy and households. Let us cast an eye over how market charters panning out today. Australian shares eased slightly lower in the first hour of trading, dragging the ASX 200 benchmark after setting a new 52-week high. The bottom performing stocks in this index are Dexus and Zipco. Dexus struck a $320 million deal to acquire APM property on Tuesday. Also on Tuesday, the ASX 200 had the weakest session of the month as the benchmark index dropped 1.06% from the 52-week high to settle at 7,097. It is to be seen if the job-focused federal budget can cap the index losses. The federal government did unveil its recovery budget, including billions of dollars of new funding. Among the biggest winners from the budget is the aged care sector, which received a support of $17.7 billion. Low to middle class income earners will see up to $10 million of another tax offset of up to $1,080 in their refunds. Looking at the commodity space, gold recovered from early declines as softer US dollar negated losses arising by US Treasury yields. Spot gold increased 0.11% to $1,837 an ounce. That's after dropping as much as 1% in the early session. ASX gold shares such as De Grey Mining, Newcrest Mining, Gold Resources and also Resolute Mining could be under the spotlight today. Moving on to energy now, oil prices remained highly volatile during the day and had reversed all early losses by the end of Tuesday's session. The gains materialised on the back of fears of a gasoline shortage after a cyber attack caused an outage at the largest US fuel pipeline system. The WTI crude notched up by 0.8% to $65.44 a barrel, while Brent crude was up 0.5% to $68.69 a barrel. Australian energy companies such as Santos, Origin Energy and Woodside Petroleum would trade higher against the broader market. Let us now take a look at the US market performance overnight. That is closely tracked across global market participants. Overnight, the US equities continued their fall, hitting a one-month low as speculation about increasing inflation pressure led to the possibility of prompt interest rate hikes in the near future, which dragged stock market and hobbled the dollar. Technology shares were among the biggest losers during that opening session, mirroring a sell-off in China, where talk of stringent regulation sent tech companies skidding. But US shares managed to recover from some of their losses over the course of the day. The Nasdaq opened with a massive gap that was down over 2%, but ended the session little changed. The Dow Jones lost 1.4% and the S&P 500 fell 0.9%. The snapback in shares suggested that inflation concerns were entrenched on the back of sky-high commodity prices and labour shortages in the United States. However, the sheer volume of money sloshing around in the financial markets also depicts that a few investors are looking to invest their surplus cash on these corrections. Worries about inflation picking up pace in the near future burst to the fore on Monday. That was when the break-even rate on 5-year US Treasury inflation-protected securities surged to a 10-year high of 2.717%. It traded around 2.69% on Tuesday. The 10-year TIPS break-even rate stood at 2.539%. indicating that the market participants are expecting inflation to average at around 2.5% a year for the next decade. Let us zoom our lens now onto bond yields and dollar movement. In keeping with market worries about increasing inflation, the yield on the benchmark 10-year treasuries increased to 1.62%. The spread between benchmark 2 and 10-year US treasuries also widened by more than 1 basis point on Monday to a total of 146 basis points. All eyes are now on the US Consumer Price Index, that's the CPI, the report to be released by the US Labor Department on Wednesday. The dollar also narrowed some of its earlier losses after slipping to a 10-week low on Tuesday on concerns that mounting price pressures could erode its value. The dollar index was down by a mere 0.12% at 90.188 after touching a low of 89.979. The Australian dollar, which is another proxy for commodity prices, traded almost flat at 78.39 cents, but off its 10-week high of 78.91 cents hit on Monday. Moving on to the major newsmakers in the Australian share market now. Donor management system for charities operating within the United States, PushPay Holdings, reported an increased operating revenue of approximately $52 million. That was for the year ending 31st of March 2021, representing an increase of 40%. Online marketplace carsales.com has said that it will acquire 49% of US digital marketplace business Trader Interactive for $797 million. Moving on now, Battle North Gold shareholders have approved Evolution Mining's acquisition of the company for $361.7 million. The industrial player CSR said that its revenue from ordinary activities declined 4% to $2 billion, while net profit after tax and after significant items rose 17% to $146 million. Next, energy company AusNet Services reported a revenue fall of 2.7% and an EBITDA decline of 3.5% for the year ending in March. Then, Australian Office of Financial Management is in plans to issue around $130 billion of Treasury bonds in 2021 to 2022. That's following the release of the federal budget. Let's move on now to the cryptocurrency space. The second biggest digital token, Ether, fell from record levels it hit on Monday, but was still up 3.8%. The value of Ether has surged over 5.5 times so far this year. Bitcoin, on the other hand, is trading relatively more stable with a 1.7% gain at $56,799. Moving on now to the federal budget winners. Australian Treasurer Josh Frydenberg tabled the federal budget in the House of Representatives on Tuesday. Total revenue for the 2021 to 2022 in the federal budget has been pegged at $496.6 billion, while the total expenses are expected to be $589.3 billion. That leaves the government with a deficit of $92.7 billion. The government has anticipated its spending to increase by 1.9%. Below are some of the measures revealed in the nation's federal budget yesterday. The aged care sector has got a fresh infusion of $17.7 billion worth of funding over the next 4 years, in a move that's likely to enhance the political profile of the Scott Morrison government. Up to 10 million people will receive yet another tax offset of up to $1,080 in their refunds, as the scheme has been extended to 2023. Moving on now, a new patent box regime is aimed at giving tax breaks on the income made from Australian medical and biotech inventions. The government has also allocated $1.2 billion over the next 6 years as part of its digital economy strategy. The federal government has also committed to spend $3.4 billion over the next 5 years as part of its pledge to deliver a more women-centric budget. The government has said that the people saving for their first home deposit will be able to put away $20,000 extra in voluntary contributions to the First Home Super Save scheme. The contribution cap has been increased to $50,000 from $30,000. The federal government has committed to add another $10 billion over 10 years to budget for roads, highways and construction of freight hubs. New South Wales will get almost 1/3 of the fresh allocation, worth more than $3 billion. Meanwhile, S&P Global Ratings affirmed negative outlook on Australia as the budget proposed heavy spending. The rating agency has said that the budget leaves Australia little room to address potential risks from trade tensions. That's all from me for now. Stay tuned with Kalkine TV for more live market updates. We'll be back very shortly with more news on the markets, the economy, and diverse themes and sectors. Apart from the regular market updates, we will be providing in-depth coverage on last night's federal budget. Stay tuned with Kalkine TV. I'm Rachel, signing off for now.